But separately, let's welcome on board Anand Tandon to make sense of what's happening in the market. Anand, we understand that AMFI, which is of course the Association of Mutual Funds in India, has actually come out with a circular to its trustees of the mutual funds to protect interest of investors of small cap and mid cap schemes, indirectly cautioning them a bit with respect to the kind of froth that we are seeing in the small cap mid cap space. Would you concur with the view that small caps is getting a lot more headier?
Small cap has been valued higher than mid cap and large cap for quite a while now. And the biggest risk that is there in small cap is the simple fact that if and when the market turns, it's extremely difficult to get out of. Not only do they become illiquid, but many of the ones which are their corporate governance is a bit uh, uh, dubious. I would say the earnings also start to vanish as the market comes down. So in both cases, you need to be careful. That said, mutual fund managers are likely to be quite good in terms of being able to figuring out which are the ones that are worthy of investment. So I would think that while one should be less putting less weight in the small cap, it is not as if you are likely to be owning a portfolio which is of poor quality.
I want to talk about a couple of names, Kunal, and that is today, obviously, Havells. We've seen that positive note that came in yesterday. Since that, Havells has been buzzing. Other than that, we are seeing even Viga today buzzing away in trade as well. So this consumer durable side of a sector, and seems like that's playing out. What's the view on both these on the charts? Is that an attractive time to start looking at these again?
Well, yeah, seems like maybe not an attractive time to buy, but then of course an attractive time to hold on to these names. The only reason why I would not suggest a fresh buy is because of the market scenario where there is a strong bit of a risk off. So it's bound to be that these stocks which are showing a lot of resilience today may over the next couple of days see some sort of a cool off or a mild correction. So I think buying on dips maybe a few percentage points from current levels could actually be a good strategy. But I think what we also need to see is that these are fresh breakouts which are happening for stocks like V-Guard and Havells. So Havells over the last I think many months the stock was into a broad range of consolidation. I think 1400, 1440 approximately was a huge resistance for the stock. Now it's broken past about those levels by a margin of 6-7% higher from those levels. But I would still believe that the longer term structure looks very attractive. So maybe not a best time to buy the stock, but I think maybe a couple of percentage points lower. Both V-Guard as well as Havells could be a very attractive buy.
V-Guard as well as Havells both look very attractive. Actually, let me toss it to Anand as well. Anand, the entire consumer durable space was a bit tepid only, despite the fact that real estate demand was quite high. We didn't see a run-up in these stocks, partly because that most of these stocks are already trading at expensive valuations. What's your view now when it comes to the consumer durable and home building space?
Well, in theory, there should be an area which should do quite well, even as you said that the real estate market is doing well. However, the numbers that people have been reporting with the companies that have been reporting has not been setting the house on fire as it were. The volume growths are muted, and consumer durable has not been one of those which has done exceedingly well in the last quarter. So there does seem to be a bit of pressure in terms of demand, and I don't see that going away currently in the context of the valuation that we're talking about, which is already very stretched. There is very little scope for error in terms of execution. So if the execution is not great and the earnings have downgrades have to be coming through, you will have a situation where these stocks are not likely to be performing very well. There can be individual stocks which one can look at, but broadly, I think this is a sector which will probably lag some of the overall market.
Okay, so that's about the consumer durable space. Yes, in theory, they should be doing well. But what about autos as a pack? Clearly on the back foot today in the reverse gear completely. Naresh, what within the auto stock would you take this as a buying opportunity, if any?
So, in terms of auto, the name I would be interested in is to look out for a dip in Maruti if it comes down back to the closer to the 10,800 to 11,100 mark. So, that would be the point of time where you want to re-enter the last retest of the breakout. So, the previous breakout was 11,000 from where the stock moved up recently to 11,600, 700 levels. So, on dip, Maruti looks interesting because the stock has been a breakout as well as for the last 5-6 years, the returns were nothing to be spoken of. And then Eicher Motors is something which I'm watching out for. Today got stopped out into it, but if it can sustain about 4,000, 4,040, that could be a breakout trade.
Okay, Eicher Motors Maruti is what you're watching out for, Naresh. Anand, good afternoon. This is Vinny here as well. And what I want to talk about, with the auto pack itself, today we did have a brokerage note that came in also from UBS, which highlighted in terms of the muted demand that we're seeing for EVs. We had seen Tata Motors actually cut the prices for its EV segment as well. What is your view on overall the auto sector, as well as where do you see especially companies that are working on the EV side? Is that something you are getting an understanding of in terms of a muted demand as well?
So, you have to look at international trends to see what's happening in EVs, because EVs is not a large part of the portfolio for most companies in India. And what you're seeing what you're talking about as a trend is something that one is witnessing globally. That suddenly there is a cutback in the enthusiasm for EVs, both from the consumer as well as the producer. And most of the companies, including Tesla, have had to reduce the price at which they are selling their vehicles. So there is a re-evaluation of how quickly the EV will work. In Indian context, there is also a further issue of infrastructure for charging. That is at least at a public level being rolled out fairly soon. So I think that still be a while before EVs will become really popular, and then probably hybrids are the place that we should look at. Uh, but as I said, the overall portfolio size, most of the companies are not dependent on the EV, and moving to hybrid should be a relatively easy bet. So EVs itself, I don't think are the ones that will move them.
So that's the take about the auto sector and the overall EV trend that we are witnessing. We did speak with a couple of experts today as well to get a sense, because there are some headlines suggesting that EVs might not be completely going off the shelf as we understand the perception to be. UBS had also actually written a note. I think UBS or Jeffries, one of them had actually written a note on the entire auto sector today, talking about how not. Yes, so that was UBS talking about how not the EV sales aren't picking up as much as the street would want to believe, and that's what even Anand was referring to as well. But shifting focus in terms of the other stocks which are actually buzzing around, just taking stock of some of these big movers. So Rainbow Children's, that stock is up 10%. Force Motors has been a very curious case. We have been discussing that earlier as well. And Vodafone Idea, that stock down about 13%. Force Motors, is this a stock that you track individually, Anand, by any chance?
No, I have not been.
Okay, the reason I'm asking this is because this month itself, that stock has run up quite a bit. Let me toss it across to Kunal. Kunal, on Force Motors, what would be your recommendation? And the other one is Rainbow Children's, seeing a good amount of price volume action today.
So don't track Rainbow, so I'll skip that. But I think Force Motors, yes, I think the last 10-15 days of run-up has been exceedingly high. And I think the more noteworthy part about this rally recovery for Force Motors is the strong pickup in volumes. And I think the average volumes for the stock has picked up exceptionally well, for the stock as compared to the consolidation which was going through in the good part of 2023 or the second half of 2023. So I think this generally indicates that maybe there's been a fresh way of buying into the stock price. I would probably believe that mild phases of correction. So these kind of rallies may generally not see a major retracement or a complete retracement. But even if the stock, for example, which has rallied up more than 2,000 points in the last 3 or 4 weeks, if it rallies, if it corrects, say by 500 to 700 points margin, which is maybe closer to a few percentage points for Force Motors, then I think that could be a good point to enter the stock.
Okay, surely keeping an eye out over there for Force Motors. That's Kunal's view there. But Anand, let's talk about, Rainbow Children's. Is that something you look at as well? And Kim's, today both these are trading at all-time high levels as well. So anything specific, you see in terms of triggers that are coming out for Kim's as well as Rainbow Children? And is that something you're looking at in the space of, the hospital sector side as well?
So hospital is definitely an area which is of interest, largely because of the fact that there is a consolidation going on in the industry. Many of the corporate hospitals are expanding by acquisition, and it is very likely that the smaller hospitals will get squeezed out, because either you are a very small nursing home catering to a specific geography, or you have to be one of the larger chains. The in-between size is not going to be very sustainable for a variety of reasons and costs. So from that point of view, any niche area like Rainbow, which is focused on children, etc. I mean, especially deliveries, or others which you mentioned. The space is definitely interesting. Now that said, the ROE for most of the hospitals is rather poor because the cost of setting it up actually goes up quite a bit. So you have to find means and ways of how you're going to get a proper ROE. And in that context, most of the companies have actually had a serious run up. So if you are looking at anything now, I would think that hospital should be a part of the portfolio, but to expect that you will get an immediate return, maybe you may require a lot more patience because there's already been a fairly strong upside that you have seen in the recent past.
Absolutely, but today we also managed to speak to Dr. Bhaskar Rao of KIMS Hospital as well. And, in terms of when we had point blank asked him, Manisha, in the morning about the profits of the company as well, he clearly said that, do you expect 500 crores? The simple, straightforward answer was just a yes.
Yes,
and that was
absolutely
it was so
easily.
confident there.
I know.
There was nothing to fear about. But let's listen into his capex plans. They're coming into Karnataka, Maharashtra in terms of bed additions. What's happening on that front? Listen in.
We have been built in the last 2 decades about 4,000 beds. In these areas, we want to build next 3 years about 3,000 beds. We are already put the plan and nearly it is costing around 2,500 to 3,000 crores of all these 3,000 beds are concerned. So we have been captured in such a way all these funds we are going to raise through our internal accruals and as well as a part of the debt. We are very, very cautious about the debt position is concerned. We want to go up to 1:1 EBITDA and debt. Maybe some quarters we may go into 1:1.5. So we will be able to come back to normal in the next 2-3 quarters once we reach the 1:1.5. That is very, very cautious. And we have been already identified these 3,000 beds. Some of the beds are coming nearly in Andhra and Telangana, nearly 1,500 beds. Another 1,500 beds we are going into the other states like Maharashtra and Karnataka and Tamil Nadu. So that is the plan for the next 2-3 years. So by the time in the next 3 to 4 years, we will be around 7,000 beds. Then once we consolidate these 7,000 beds and we see what we have been achieved and what we are planning to achieve, if we are successful in the same page, then the next expansion for after 3 years will be a little bigger than what we are doing today.
Okay, so that's the commentary coming in from management of KIMS. But on the losing side, you have Vodafone Idea down 15% as we speak. Z Entertainment is also fairly volatile. Both of these are the trader favorite stocks which keep on seeing heavy volumes today as well. They're trading with good amount of volumes, but the move is on the downside clearly. Motilal Oswal as well as PNC Infratech are some of the other names which are reeling in the red. But from the frontline index itself, apart from Infosys, TCS and maybe an HUL and Bharti Airtel, most of the stocks are actually trading in the red. So the market breadth is clearly very skewed towards decline right now. And take a look at Reliance, a cut of 2.5%. That itself is good enough to kind of break down the Nifty, which we're seeing right now as well. It's going below the mark of 21,900. But Kunal, comment on the chart checks of Reliance as well as ICICI Bank. Heavy selling on both the counters today.
Yeah, I think Reliance is something interesting because, yesterday for the first time the stock had broken past about the 3,000 levels.
Yeah.
And, today the stock is sub the 2,900 mark, at least in the last couple of minutes, the stock was sub the 2,900 levels. So these are very extreme kind of reactions for a stock like Reliance Industries. Now, more importantly, when I look at the charts, today's low with the stock has hit, that's sub the 2,900 mark, is almost like a 14-day swing low for Reliance Industries. So imagine it took 14 days for the stock to move from 2,900 towards 3,000 odd levels, and just one single day the stock has reversed the gains for itself. So that's still an indication that the market, or the stock is going through a bit of a chop and churn kind of a price action. In this kind of a scenario, what we ideally do is we try and look out for more higher ranged, supports as well as resistances for the stock price. I think the more prominent support now for Reliance Industries should be the starting point of this rally, which is closer to 2,820, 2,840 mark for the stock on the spot levels. And on the upside, I think the 3,000, 3,005 levels, which I hit yesterday, I think that should be taken as a minor resistance of sort.
Right, Anand, I want to talk about a specific sector that, we've seen a lot of move coming in this month was in terms of the realty space as well and the realty pack. They've overall seen a very good move coming in, obviously given the push that is there in terms of the construction side, infra side as well. Anything that you find very attractive that you would look at the realty pack, or maybe do you think in the realty sector there's already everything is priced in now, and this is where we would see it holding on to?
So unless the market collapses very dramatically, I would think that the demand for realty will continue, at least on terms of housing, will continue for a while. The challenges, if any, are likely to be on the commercial real estate because with work for home, etc., becoming a trend. You find that globally also that there is a lot of, for example, in the US, there is a lot of commercial real estate which is coming up for renting, and the prices have collapsed. And we also know what's been happening in China. So, of course, the China problem is a little more debt oriented, whereas the US is demand oriented. So, in India, if you were to look at it, I think housing still remains something which is fairly attractive. To a large extent, it's a function of how much funding is available. And while housing finance companies are an easier way to play reality, and perhaps in a more sustainable way, you could have bought some of the real estate companies. My own favorite way of playing sector is actually to buy housing finance companies. I think that still remains a good trade.
Okay, point taken. Let's just bring on board the small cap and the mid cap index and see what kind of movement that we are seeing right now there, because the headline index is down 1.25%. It's a much deeper cut for small cap index, almost above the mark of 2%, and for mid caps as well. Let's take a look as to what the cut is. It is again over 2%. So clear underperformance coming in from the mid cap and small cap space, and part of the reason is that AMFI, notice that went to the trustees as well of mutual fund, wherein they have asked the mutual funds to be cognizant of the risks which are there in the mid cap and the small cap space and take care of the investor interest there and take proactive actions to protect the investors, which could be in several forms, which could of course be protecting them from the first mover advantage of redeeming investors, to moderating inflows, portfolio rebalancing. So these are some of the measures that they have asked the MF trustees to use, and we've recently already seen a couple of these mutual funds stop their inflows into small cap category, right? It was Kotak recently that stopped it. There were others as well, ICICI Pru, Birla MF, etc. They have been a bit vocal about how large caps is the space to be right now versus the mid cap, and that's something that we are witnessing as a reaction in the stock prices today as well, because there's that nervousness that there'll be additional curbs or limitations per se in the inflows to the small cap and mid cap, and the kind of froth that we have seen might get a bit more calibrated, and that's the reason these indices are at the lowest point of the trading session. Naresh, if I had to ask you, in terms of the risk reward purely, let's look at the four major indices: Nifty, Nifty Bank, Mid Cap and the Small Cap. I know the trading isn't as deep in the broader market indices as the front line, but clearly in terms of risk reward, which is best placed and which is worst placed?
So best placed is the Nifty itself, because there's a basket of stocks and not every stock or sector is breaking down in the Nifty itself. So that's where it is. But we are very close to the stop loss. We are getting back testing to that 21,850, 900 mark. So there are times where you don't want to do anything, wait out for a day or two. So we are currently in that time where you're getting stopped out on the indices, the trade on the Bank Nifty and the Nifty, you've got stopped out, and now you need to wait it out rather than do anything. So for now, the trade is to do nothing.
Taken. So that's a view coming in as far as the mid cap and small cap indices are concerned. But just shifting focus in terms of the other big movers in the market right now. Infosys, TCS, these are holding one end of the market, so that's the good news coming in. But from the broader markets as well, there are some pharma names also which are perking up, apart from, of course, the hospital names as well. But fintechs and these, platform companies per se, Anand, that's something that we have been watching out for as well closely. Policy Bazaar has been doing well. Delivery has come back on the radar of investors, and we saw a good amount of buying happening there. Paytm, of course, was in the so-called value zone. In the benefit of hindsight tells us that today as well that stock is a bit lower. But how should the retail investors approach this entire fintech and class of 21 IPO group as a whole?
You don't necessarily have to buy everything that's in the market. If you're looking for something which is a more balanced portfolio, like one of your analysts earlier recommended, the life insurance space is something which is quite good. There is a reason why PB FinTech is doing well. They are also leveraging off the same trend, though they are not the life insurance company itself. So to some extent, some of these trends are very long-term trends, and therefore, dips should be used as an opportunity to buy. On the fintech space, where you are trying to get into payment banks and all that, some of that is actually very volatile. Retail investors should really leave it out for the professional one. That said, there is a case to be made now, perhaps that Paytm will not do as badly, and from here also you should be able to see a movement upwards in terms of profitability. We are not talking about the stock price, and therefore there could be a case for holding on to it at some level. But my own view is that if you are looking at something with the regulator doesn't like, you don't know how things will pan out. So it's much better as an investor to not play the themes which are unknown, but rather deal with those which you know, and therefore are able to make a more sensible view of how they will pan out and what will be the kind of earning. So necessarily, it's not the best idea to take adventurous positions, especially in a market which is showing some signs of it.
Right, Anand, thank you so much for joining in with us this afternoon, as well as giving us an understanding in terms of the markets, individual stock moves, as well as sector-wise as well. Thank you so much, Anand, for joining in with us.